Hello guys and welcome to Stone's Sheet Review. This is the channel where you will be able to submit your sheets and I will get the chance to review them. We will see what works, what doesn't, what can be better, or if you're just quite awesome in Excel, you'll get full stonks. So guys, welcome to the channel, and today we're going to review our first sheet, which is the break-even analysis from Simple Sheets. So guys, as always, remember to hit that like button, hit that subscribe button as well, and remember to tap that little bell notification as well so I can notify you guys once I upload any more content. And without further any ado, let's get into this one. So basically, I'm going to go into Google and I'm going to go to Simple Sheets. So this is where the template lies that we're going to review today. So I've got my little shortcut set up here. So if you want to get to the Simple Sheet content, this is a very nice website, Simple Sheets. It's got 100 plus templates, as I will show you now, and I'm just going to access my products. So guys, if you want to get access to this website, click the description above as well as below, and I've left it here in the video description as well, so you can get access to the sheet that we will review today. So I'm just going to go to my library and we're going to start off with our very first sheet. I'm very excited. So let's start off with a little bit of finance. So this is just a few of the examples of the sheets that's available on this website, which is quite awesome. There's invoices, expense reports, data analysis sheets, but today we're going to focus on our finance sheet. So we're going to start with a very top one, break-even analysis. This is a very nice sheet. So I'm just going to click on it. And we're going to go and download this sheet. I'm just going to click on the download link here. Here it downloads. I'm just going to open it for our guys. Open up. And there we go. I'm just going to open up our Excel spreadsheet here. So it should be opening up. And then we're going to get the chance to review it. So we're going to always enable the content if it opens up. This just enables the macros in the background if there's any macros in, and we're going to enable the content. So the very first tab that you get is a little nice description of what a break-even analysis is, but I'm going to take you step by step through this tutorial as well and this review. Alright, so basically we're going to go to the break-even analysis tab, and just straight off the bat we've got a nice analysis here. I'm going to zoom in for our little parts, and I'm going to explain to us what's going to happen here. So basically, let's say we're going to start off a new product or new venture or business, and we need to decide if it's going to be profitable or not, and where is the break-even point, basically where you put in your money or your funds or capital or investment, and at which point you will make profits. You will pay back the initial investment with all the incurring operating costs, and now we're starting to look into profits. So we need to determine that specific point in time, and this is what this template does. It's quite magical. It's a one-pager, no fuss template, and we're going to start with the review now. So first of all, this little button here, just here, there's a little button in this template that says full screen. So I'm just going to zoom in and I'm going to go in. So here there's full screen. If you tap it, then it looks like a little nice application. So I'm going to tap full screen. It takes away the ribbon, as you can see, and now it looks like a very nice and sleek application that we use. So there's no ribbon or copy and paste available here, and this now you can just input your data, which is very nice. To get out of full screen mode, you're just going to hit exit or escape. So that will bring back that ribbon. So let's start off with our initial investment or initial costs. So I'm going to zoom in and I'm going to give you a little bit of tidbits as we go with the review of how this is accomplished as well. So we can see here with this specific scenario, we've got facilities, machines, furniture, software, storage, hardware, and buffer cash. We always need that little bit of cash that we need to put on side just for any contingency plans. And basically we've got our amounts here. This is our initial investment. We're going to start off this business from scratch. So you can always amend these are not formula driven, so you will see there's no formula here. So let's say our facilities was 1.2 million. Let's change it to 1.3 million for this example, and you'll see the data validate or the data the conditional formatting will change as well. Let's say storage hardware was a little bit more, let's make it 200,000, and you'll see it will change in relation to the other amounts here as well, and it automatically computes into our cumulative cash flows as well here, which I'm going to explain a little bit later. So how do we accomplish this conditional formatting? So I'm going to just start a new spreadsheet. I'm going to copy and paste this. I'm going to highlight from facilities to buffer cache. I hit Control C to copy. You will see the running ants. I'm just going to start off a new sheet. I just want to show you how we do those data bars. Control V to paste. So we've got our facilities, machines. So let's start off. Let's say facilities was $1, machines 2, furniture 3, software 4, storage hardware 5, and we've got buffer cache 6. So I just want to show you that nice color variation that we get on this spreadsheet. So this is a very nice touch. I like it a lot so far for this review. So I'm just going to show you. You're going to highlight the amounts. You're going to go to conditional formatting, and there's a little option that says data bars, and there we can choose our setup. So green, more or less the same that we had. So you will see the largest amount will get the highest ratio here, coloring. If we change it, so let's change this to 10, it will change accordingly. So this is very nice functionality and a little bit of data or conditional formatting. So back to the review. So this is the total amount. So if you click on it, this sheet is protected, so you won't see the formulas here. This is just to protect from unnecessary fiddling. But if you want to see the formulas, no problem, easy fix. You go to review, you say unprotect the sheet, and now you'll be able to see this is just the sum of the initial costs here. So this is our initial cost to start off our business. So at this point in time, this specific scenario will utilize $4.2 million for that initial investment amount. Okay, so far so good. Let's go to our second step. So the second step is our fixed costs. So this is part of our yearly cost. We have a fixed cost and variable cost. So fixed cost is always set in stone. I'm going to show you a little graph here as well of how fixed costs look. So it is stable over a fixed period. So we've got salaries, we've got rent, electricity, water, gas, and transportation. These stays fairly fixed, and we can change it as well as we progress along. But let's say for rent, every month you're going to pay a specific fixed amount, and we're going to plug it in here in this amount. So let's say salaries was $300,000 per period. So if I speak to period, that is basically a year. So as these amounts get populated by yourself, in your scenario specifically, the graph will populate as well. So we're going to speak about this graph a little bit later as well. So I'm just going to fix it back to $200,000 here for our specific scenario, as that's nice and dandy. All right, so that's the second part done and dusted. It also uses that nice data bars that we've explained a little bit previously as well, to showcase which is the cost that drives the most within the specific range, which is very nice. So you can see rent, obviously our biggest cost, fixed cost. In initial capital, our machines will be the largest portion, followed by facilities and buffer cache and so forth. As well as rent will be the first, driver, salaries the second, and transportation. So this is a nice visualization of your cost to see specifically where the burning points or the big ticket item lies. So this is quite nice. All right, so we get a total as well for our total fixed cost. And now here comes the interesting part. We get to the variable cost. So variable cost works in a line, or in a line like this. I'm going to show you in the graph as well. So the more we produce, the more it costs. So that's a direct proportion as well as if we sell the product. So we're going to produce products here, and as if we sell more, we make more revenue. So that's also variable in that sense. So we've got products here, A, B, C, C, C. So let's make it a little bit more relevant. We're going to say product 1, we're selling product 1, and you can drag it down to show to product 5. So we've got 5 products in this business that we're going to sell. And here in this portion here, I'm going to view the grid headings as well. So I just want to talk about headings. So it gives that headings as well. So we're working in C36. So to get that, you just go to view and you tick headings. So we can see the headings here as well. So for product 1, the total cost, this is the raw material and all the direct cost to produce this product, it will cost us $12. We're going to try and sell it off for $20. So here in D36, you put in your unit price. That's the selling price that we're going to ask for the product that we're going to sell off. The yield here in E will basically show the deficiencies, if there is deficiencies in our product line. So let's say we're confident that 95% of the products that we're going to produce is going to be ready for to be sold, and 5% will be scrapped or will be placed as a deficiency. So this is also part of the functionality, which is quite a nice touch, because some of the financial models that I've gone through doesn't make let's say a provision for these type of deficiencies, and sometimes the numbers aren't as correct as they can be. So this is quite a nice touch here from Simple Sheets, which I like. And at the end of the day, we get a net value. So net value is only a little formula here. So I'm just going to zoom into our formula here. So you will see it's just I'm just going to cancel this. We don't want to save. It's just a if error wrapper. So if there is a error, it will show a naught. So this just covers that it doesn't give that error, the NA errors that we usually get. And basically if E36, so E36 is our total cost here, 12. If 36 equals naught, it gives us naught. So if you don't have any cost, it doesn't have any net value basically. And if it does have a value, we take D36, which is our unit price, less the cost price in C36 times the yield. So the yield in E, and that will give us our net value that we get per product. So I'm just going to go out of zoom mode here, and this will give us a nice net value as well. We've also got an average net value. So we're going to see with all the products that we sell, we're going to average a $6.05 for the products that we sell on average. As well as we can see there's nice data or conditional formatting here on the data here as well, with instead of the bars that we show here, it's a representation of which products has the highest net value, which has the lowest, and which is the average. So to get this right, we're going to go back to sheet 1. I'm just going to copy over product 1 to 5 here, Control C, get the running ants. Back in sheet 1, just here in A8, I'm going to Control V to paste. And let's say we've got that net values as well. Let's say the net values show as 1, 2, 3, 4, and 5. It still has that little validation or the data, the conditional formatting of the data bars. We're going to change that. So you go to Home, Conditional Formatting, and we want to say instead of data bars, we have icon sets, and the icon sets will stay here. To take away this part here, we're just going to say clear rules from selected cells. That will take it to default. And we're going to go to conditional formatting. We're going to go to icon sets, and here is the icon sets to show our product 4 and 5. In this case scenario will be our top sellers here that we're going to focus on. Product 1, 2 is not as valuable, and product 3 is quite indifferent in relation to the 5 products that we sell. So this is a nice little bit of a tidbit or a nice fact that we've got here running, nice functionality. And that's step 3 done. Very awesome. And we're almost done to assess if this project is going to be profitable or not, or what is the break-even analysis. At which point do we do the payback period? So those are 3 concepts that we're going to do now as well. So you will see in I, it already changed because it's also formula driven. Product 1 to 5, we can see it pulls through from our variable products that we're going to sell. And basically we need to try to forecast how many quantities of this product are we going to sell. So from product 1 in period 1, so this will be in our first year of operation, we're going to sell 52,000 units. We're going to sell product 256 and so forth. So this is changeable, not formula driven. So this is forecast driven. So let's say we aim to sell, let's say 60,000 of product 1, and you'll see it automatically changes the cumulative balance here as well. So this is quite a nice formula here. This pulls through from the helper sheet. So you can see the helper sheet. You can right click here, the tabs. We go to unhide, and we're going to unhide the helper sheet. So this is where all the formulas are run. Very nice from Simple Sheets, because it takes away the think work and the coding work, because it automatically uses all the data that you've captured, the basic data. It transforms it by nice VLOOKUP formulas. You can go through it in your own time, and at the end of the day it will give us our final cumulative balance of what has been produced, at what cost, at what has it been sold, deducted from each other, and we get a profit or a loss for that period. And as we go along and we sell more products, it's going to go into a positive, and then at a certain point it will be our payback period or the break-even analysis here, break-even point. So in this scenario, if we take all the products that's been produced, these have been accurately forecasted, we will see a running total here that only in period 11, in the 11th year, we're going to get a positive period here. So only in year 11 from this scenario, we're going to have our payback period. All right, so this is quite interesting. So let's say, how can we take the payback period? Let's say if we can take our highest sellers, product 1 and 2 in this case, from the net value. Let's say we can sell it off for, let's say, $22 instead of $22. And product 2, we can sell it off by $24. So just increasing by $2 to sell, it changes from 11 years. Within 8 years time, we will be going into the positive. This is quite interesting. As well as, let's say, just for argument's sake, we can sell it off for $24. This changes the whole dynamic as well, because it goes from 8 years, we're going to take it back to 7 years here. So this is very interesting. It shows the nice cumulative balance, and break-even point will be here at the 7th period mark. And that concludes this review of this sheet. So Simple Sheets, well done guys. I'm going to give this sheet a clap of approval, because I really like this one pager, no fuss sheet. And guys, once again, if you want to download this sheet, descriptions above and below. And if you want to submit your sheets for review, which is very interesting, where we can see where we can tweak, or maybe it's just the perfect sheet that you want to share with everybody, please use the email address up above or the one down below, and I will have a chance to look at your sheet and make a tutorial on it as well. Guys, I hope you enjoyed this one, and I will see you for the next one. Outro, here we go.